All right, let's kick this around. Let's look for the root causes of whatever. We have Joe Lavorgna, who was the former chief economist of the White House National Economic Council. He's now the chief economist at Natixis Bank. And we have Jason Trennert, chairman and CEO of Strategas Securities. Jason, you look fine. I know you went home to put a suit on, and we thank you for it. Look how nice you look.
I cannot do
Joe,
casual.
come on. I mean, this is a guy.
Very happy to see
It was
him.
one of the few days
I like your tie.
Casually.
Jason looks great.
He's a mensch. He's an absolute mensch. All right, Jason Trennert, this just interests me, and it's a sort of sad story in a way, but here's Joe Biden telling us he's going to, here are the root causes of inflation, and then he does anything but describe the root causes of inflation. I don't know if it annoys you as much as it annoys me, but if you don't understand the problem and you don't own the problem, you're never going to solve the problem. That's the part that bothers me.
Amen. And I think you laid it out perfectly. You dumped $2 trillion into an economy in which the economy wasn't open. So it was a classic definition of too much money chasing too few goods. On top of that, the Federal Reserve increased M2 by 40% over the past 2 years. In my opinion, they're moving too slowly in terms of trying to soak up some of that liquidity. And of course, we're ignoring the most important resource really in the world, which we have in abundance, which is oil and gas, which we have right underneath our feet. So it's really not surprising. It shouldn't be surprising that we have inflation. And I think another thing you would say is that inflation, as you pointed out, inflation's been over 5 for 12 months in a row. It's been over 7 for 5 months in a row. So this is, describing it as a Putin price hike would be like me saying I got caught in a Putin traffic jam and that's why I was late to work. It doesn't fit with the narrative of what's actually happening.
What do you think is actually happening right now? With today's jobs report and other things, the Putin price hikes versus overall inflation, what do you think is going on?
The data look okay. The macro data look okay. The job market's slowing. We were up 333 private. If you look at the trailing 12-month average on jobs, it's about 550. Even the year-to-date numbers through April were about 500. So job numbers are slowing. Key thing, Larry, is we're still 822,000 below the February 2020 peak. So we're still in recovery mode. We're not in expansion mode. Moreover, if we look at what the trend would have been absent COVID, now, we don't know exactly what the jobs would have been if the Trump administration continued. I know what you probably think. But if we had that 2017 to 19 trend in place, we'd be about 6 million higher than we are now for jobs. So the job market's recovering. It certainly looks pretty healthy on the surface. But as you know, I'm much more bearish on the outlook. These food and energy price hikes are going to weaken the economy substantially. The regulatory backdrop, all those things, to me, suggest we'll have a recession this year, but it will be mild.
So Rick Santelli is right, my pal. I'm from another network, but he's still a dear friend of mine. The canary in the coal mine is the continued decline of real wages. Not necessarily overall incomes, but wages.
Well, the real wages, Kevin Hassett's been very clear on the fact that real wages have been negative, and that's a problem, which is why when you look at consumer expectations, which are a leading indicator of future spending, they're in recession territory.
How come Joe Biden doesn't mention that? He wants to tell the truth, Joe. He said he wants you to understand the root causes. No baloney. No baloney.
Larry, we know how Washington works, and people take credit for things they shouldn't and don't take credit or don't take blame when they should, but I can't answer that. I don't know.
Jason Trennert, as a distinguished Wall Streeter, what is your outlook for the economy and inflation? And I'm going to get to the stock market also. It's all of a piece. Stocks got clobbered today, or semi-clobbered. I don't know what clobbered means anymore. But what's your outlook?
Well, to start with the stock market, I think you have to continue to be cautious, mainly because inflation's impact on earnings multiples. Profits might be okay this year, mainly because higher inflation tends to lift profits. Profits are in nominal terms, but margins go down, and investors wind up paying less for those earnings because they're worth less. Our opinion is we don't get a recession this year, but we have the odds at about 40% for next year. And we're hoping, I think the Fed's hoping they can engineer a soft landing, but a lot has to go right, and we have to avoid some further bad luck, it seems to me, to avoid one.
So you're not a recessionista. You are worried about inflation?
I am. I think it's structural. I think wages I think rents, I think our energy policies are really don't have an energy policy. We have environmental policy. And then the end of globalization. Those are four things, in my opinion, that are going to make inflation much more difficult to root out. It may have peaked on a year-over-year basis because of base effects, but I'm not convinced it will get to the Fed's target anytime soon.
You are a recessionista.
Yeah. Is that a good thing?
By the way, it could be just one thought here. I myself would tend towards what Jason, I don't see it this year. I think you perhaps do. But I think you're heading towards an election year recession, a presidential election year recession. I think Biden's going to be blindsided by that. The Fed's going to be turning the screws, whether it's sooner or later, aggressive or not. The risks here, if these normal rules of thumb apply, takes a couple years for monetary restraint to kick in. You're looking at a presidential year recession. That can't be good.
I'm a reformed Keynesian, thanks to you.
I remember
right?
that. I remember I first met you were a Keynesian.
That's like I outgrew it. The Fed is raising rates this year, and there's some. You talk about the election cycle. There's some parallels to '94, which is the Fed's raising rates. But in '94, the economy grew over 4%, and it grew almost 3% in '93. And the economy didn't have the same regulatory overhang, and the confidence in the business cycle, the animal spirits are a lot higher. So you've got the Fed raising rates into the inflation backdrop that Jason perfectly outlaid. And liquidity is coming out of the market. So to me, as an investor, you really got to be cautious on risk because the Fed's doing everything it can to make it harder for you to make money, harder for you to buy a house, all those sorts of things. And their record of soft landings is just not very good.
Yeah, it's a triumph of hope over experience.
That's exactly right.
But you know what? It would be nice if the Bidens stopped talking about all their anti-carbon policies. I mean, look, he did it again today in the press conference. He absolutely refuses to acknowledge the need to produce more oil and gas and fossils, okay? So if my numbers are right, Jason, or close to it, we are still today about 1.5 million barrels per day lower in oil production than we were pre-pandemic. So I'm just going to say, look, I'm not smart enough to understand all these global factors, Saudi Arabia, Russia, and so forth. I do know this. If demand increases because they're pouring in all this spending stimulus and the Fed is monetizing it, and you're pulling back on the supply of, let's just say, gasoline, for starters, what happens? Yeah. Prices have to blow up. They have to skyrocket. I mean, there's got to be somebody in that lovely white building that gets this. They don't say it, but someone's got to understand that, or geez.
Again, it seems to me that the White House has an environmental policy. It doesn't have an energy policy. Listen, oil is close to $120 for WTI.
Today. Yeah.
And China has been taped up on the sidelines for the past 2 years. So if China, it appears as if China is going to be reopening. Another nasty surprise for this election year could be significantly higher oil prices. It's not beyond the pale to see oil prices at $150.
What Jamie Dimon said the other day.
I think it's certainly possible, and I think given the fact that there's been absolutely no movement on the part of the administration to provide more supply, a supply side solution, it seems almost inevitable.
Joe, when Janet Yellen said this yesterday or the day before yesterday, was part of this hostage video thing that's going on with her. I mean, she really looks, if you look at her, she looks like one of these terrorists is ready to chop off her head. Oh, no, I really loved America, but now I don't. Anyway, she says pipelines don't matter. Because pipelines don't produce new oil and gas. They don't matter.
Well, they transfer it.
No, she says they're not important. This is a distinguished academic, PhD, former Fed chair, married to a Nobel Prize winner, George Akerlof. Really? Pipelines don't, distribution doesn't matter? It's okay? You're just going to have, I don't know, you're going to have, well, of course, they won't even let oil gusher up to the sky. Yeah. How can that be?
It's just the political narrative. To her credit, at least she admitted she's wrong. You don't get a lot of people even admitting that.
But she didn't. No, she didn't.
Well, she said she didn't see it.
She did not say she was wrong. They haven't once taken back or pointed to the real root cause of inflation, which was
Yeah, too much money chasing too few goods
Thank
based on
you.
loose fiscal
now, but
policy.
Put your old Keynesian hat on.
No, that's right.
You
Well,
just had
Larry,
Keynesianism.
Larry Summers.
Right.
Again, we've talked about this many
They
times
haven't
before.
admitted, not
Larry
one
Summers,
single person in that White House has admitted that.
But Larry, to his credit, even was calling the administration, as widely reported, calling the administration, telling them back in February.
Yes.
This is going to be a major problem. You're going to have much higher inflation, and I guess
I'll
they
give
took his call,
Summers
but they
credit,
didn't listen to
but
it.
I'm not giving the White House any credit. How can anyone give them credit? I mean, the president said today, and I don't want to have to run the sound again. He just said, we're telling you what the root causes of inflation. You are hiding the root cause of inflation. And the problem is he wanted more, Jason. In that op-ed piece, look at that op-ed out 2 days ago. He's still pushing for more social spending.
I think the Democrats owe Joe Manchin. If they think they have an inflation problem now, if Joe Manchin didn't stop, and Kristen Sinema did not stop the Build Back Better of another $3 trillion, the Lord only knows what inflation would be now. And I still, as you point out, policy lags are long and variable.
That's right. That's tricky.
You taught me that.
That's
and so
tricky.
It's you've got a long way to. Fed's only tightened twice, and they just started to think about allowing the balance sheet to run off this week. The Fed was buying securities as late as March. So the Fed has a role, and the administration is not making things any better.
Boy, that is the truth. Joe Lavorgna, have market interest rates peaked? The 10-year was approaching 3% again today. Where's 10-year?
I've been of the for details that elude this segment, I'm of the view, yes, the 10-year peaked at about 3.20 a few weeks ago. And that's based on basically where I see the terminal Fed funds rate, which I don't think we're going to get to 3, because I think if the economy is as weak as I expect and the quantitative tightening the Fed's going to put in place, that's going to be enough to really hurt asset markets, lead to even a much bigger pullback in equities, and we're going to have disinflation, believe it or not.
Whoa, disinflation. Is it coming soon?
Well, the Keynesian part's coming back to me, but look, no, not this year. To points that Jason made, I think structurally we've got higher inflation, but cyclically I could see inflation moving down a good deal by late this year, early next year. But the economy will be weak.
I don't agree with that.
I don't. I mean, with all due respect to Joe, and the Lord, no one knows anything, but I think it's much more structural, and it's very hard to get control of inflation if the Fed funds rate is below the rate of inflation.
By 7 percentage points. But we have to get out. We're running out of time, but it's great fun. Remember, Milton Friedman taught us about the importance of money supply, monetary impact on inflation in the economy. One other thing Milton taught us, you can have inflationary recession. Inflationary recession, okay? Just hold that thought. It's a bit scary, but I think that's the trap that the Bidens are going to run into before presidential election year. Joe Lavorgna, Jason Trennert, two of the best of the best. Jason, you look terrific.
Thank you.
Secretary of State
Thank
next
you.
time.
Thank you.